Hey guys, welcome back. In today's video, we are talking about AMC 100Xing, how shorts need help, the collaterals needed, and many more in this video. Firstly, we're taking a look at this. If someone told me that within a year, AMC will be virtually debt-free, and current AMC investors will see the value of their investments increase by several 10,000%, I'd be inclined to believe them. Reason is the humongous bets back in 2020 on AMC's bankruptcy, it won't happen. So we obviously know what AMC's been up to recently. Once again, we've talked about this new Taylor Swift film, and the most important part is not just that it's being released and in terms of the box office number, but actually because it was distributed by AMC Distribution. And that was the big part to take away, because it shows how AMC has a new revenue source that is only going to get bigger. Bear in mind, we've talked about this. Taylor Swift pitched this idea directly, or at least their team pitched this idea directly to AMC. They didn't go to any other studios, they went straight to AMC. And that itself should be a sign of confidence in terms of, I think, multiple other companies and teams are going to be going to AMC distribution as well. So you can only imagine how well AMC is going to grow. But that's just the fundamental side part of what in terms of the growth. There's obviously a lot more to consider when we talk about the real price discovery of AMC. As many of you should know by now, there are multiple factors being taken away right now when we take a look at how some regulations are happening, how more importantly, we're seeing margins being taken away, we're seeing these collaterals being taken away from the short sellers, and that's obviously causing a problem. And then ultimately, we obviously have the squeeze, and with how we're seeing how shorts need help right now, you start to see why it's getting sooner and sooner. And so this is what we talked about in terms of why we can see AMC easily 100x. Then furthermore, it's also about how we're seeing more and more money flowing into the market for now, and they're trying to find the best investment. So you can see here, foreign ownership of US equity has continued to climb this year, jumping slightly above 18% through first half of the year. Now, we talked about how institutions have been trying to accumulate as much as possible. And in yesterday's video, we talked about how the movie industry is a recession-proof industry. And so in times of this, where we're seeing signs of recession increasing, where we are seeing a market crash likely to happen, multiple capital are trying to find their way of buying into safe investments. And this case is why we've been seeing so much money flowing into AMC, why we've been seeing the institutions trying to accumulate as much AMC as possible. And so to see that this is also going through as well, bear in mind is that we've seen how firms have been trying to bet extremely big, not just on AMC, but on GME as well. And so that should already be an indication of why we talked about with the investor confidence. And so it's why we've said that AMC is obviously going to do very, very well. And now earlier we talked about the real price discovery, the true price discovery, because we've known that AMC should be way higher than it is right now when you exclude the squeeze. When you just talk about AMC as its fundamentals, as the sentiment in terms of where AMC should be when you don't allow all of these FTDs, all these swaps, where AMC should be, we know that they should be in the several hundreds. And a big reason, and once again taking a look at the daily update, is the fact because we're seeing dark pool. You can see here 68% of all volume being routed off exchange in dark pool for AMC, over 2.3 million shares. And bear in mind that this was only 11 a.m., so only a few hours after the market has started. So you can see that it's not just at one point in the day where the orders are being hidden, but it's throughout the day they're continuously trying to suppress AMC. And it isn't just on AMC as well. You can also see it for GME. 6.6 million of the 11 million shares traded today in GME were internalized and routed off exchange by market makers into dark pools. GME was up as high as 27.34 today, probably nothing. So you can only imagine what we should be if we don't see this dark pool. And once again, when you take a look at the stocks that suffer the most dark pool usage, you'll find that AMC and GME is on top of that. And so it's not a coincidence that the shorts have been trying to suppress AMC and GME recently as much as possible, because we've seen how the collaterals is failing. We've seen how their margins getting extremely tight. And it's also the fact we talked about how naked shorts have obviously been attacked as well, especially with the GME warrant. We talked about what South Korea is doing. We'll talk about that later on in this video as well. So you can understand why shorts have been trying to beg for help. And that is also a big reason for why they were trying to go against CAT. You can see the CAT system once again exposing, and this is for the 519 million CAT options errors on August 26. That's good for 51.9 billion shares. So the reason why they're obviously against the CAT system should be obvious to you by now. It's because the CAT system is actually exposing these institutions. Now, we are only halfway there, because whilst we do have a system right now that exposes what's happening, we don't have a system where it punishes them and stops them from doing this again. We've seen in the past how institutions have been fined $1 million, $5 million, or even, higher than that, but ultimately that is not enough, because we talked about it as for the institutions, they see it as a cost of business because they make way more money from doing these things than they do have to pay a fine. They may be able to make $100 million in profit and only pay a $1 million fine. And so for them, it's obviously why they continue to do it. And so that's why we've said that we're only halfway there. We're able to expose them. We're able to see what things they're doing, but we are yet to see something that prevents them from doing this. But it's still a big step for us, because now we understand exactly what they're doing. We can obviously call them out on the things that they're doing. And for the people who don't understand why AMC, why GME is constantly being suppressed, how it's being suppressed, this is obviously one way to show and for you to understand. And then you can see the correlation between AMC and GME. And it's why we talked about how we've known that these shorts have been trying at their best to suppress AMC and GME. You can see the movements from AMC and GME. Now, we've talked about this plenty of times in the past as well. There have been plenty of times where you'll be able to see the correlation between the price movement of AMC and GME. And that gives us a lot of data, because the reason why we see the correlation is because the short sellers are mutual, meaning that the short sellers who've shorted AMC are shorting GME as well. And in most cases, most of those short sellers are shorting both. And so when we understand that when AMC goes up and then GME follows right after, it's because AMC is crushing into the margins of these short sellers. And that's why there's weaknesses. That's why we see GME goes up. And vice versa. When we see GME goes up first and then AMC follows right behind, it's because GME is eating into their collaterals. And so this is why we see the correlations. But this is also why we have to understand it's always been AMC and GME together, and it's never been a competition. Another reason to understand why the shorts are panicking and how we know that it's been getting closer and closer is because we're seeing the reverse repo going down. Now, last week we ended around at $13 billion. This week we're at 14.4. Now, you should know by now that it doesn't matter if we fluctuate by $1 billion. It doesn't matter if we fluctuate in a week, because ultimately, when you look at the 60-day average, the 180-day average, what you'll see is that the reverse repo is going down. It hasn't been a straight linear graph down, but when you take a look at what the overall is, it is going down. So it's not, don't panic just because we've seen it go from 13 back to 14. It doesn't mean that suddenly the shorts get a lifeline. Unless we see it go back to $2 trillion, unless they inject another $2 trillion into this, we're going to be seeing the reverse repo go to zero. And so we're going to be seeing the liquidity for these short sellers to evaporate. And when they have no money to access, when they can't borrow any easy capital, that's when we'll see them giving up. That's when we'll see AMC and GME really take off. And then earlier we talked about how shorts are obviously seeking help, how they need collaterals, and then you can see here as well, market reform fails to deliver will be exempt from fines when the EU switches to T+1 settlement in 2027. Now, the move aims to reduce systemic and counterparty risk, improve liquidity, and align with markets like the US, which transitioned in May. This needs more attention, whereas the incentive to not fail to deliver, totally outrageous. So then you can see how they're trying to help them again. And now for me, it was quite shocking to see that Europe is doing this as well, because they have been extremely strong on attacking naked shorts. Now, of course, not as strong as countries like South Korea, but they've done a lot more than the US. But now to see them do this is obviously allowing us to understand what is happening. Right before this, prior to this, we talked about how a lot of shorts have been trying to push their shares offshore into European regions, because that's how they reset the swaps, that's how they reset the FTDs, and now it's seemingly understandable why they're doing this. But why they're trying to move these AMC shorts and GME shorts into Europe is because they knew something like this was going to happen. And so you can understand what we talked about with when we say shorts need help. Another thing you can see is CFTC is allowing stable coins as collateral in US derivatives markets for the first time. Now, I want to make it very strong and I want to highlight this as much as possible. This is not me going against crypto, but it's me saying the fact that if suddenly they're allowing crypto, and in this case stablecoins, as a way of collaterals, when prior to this they weren't allowing crypto as collaterals for derivatives, it truly shows just how over leveraged the derivative position is, and it allows us to understand why these shorts need help and how much help they need. And then finally, we're taking a look at this point, and we talked about this. Look how far South Korea moves to stock market manipulation, where we take a look at this and you can see super rich individuals caught for alleged massive stock manipulation scheme. Now, you should know by now, and we've covered this multiple times on this channel as well, South Korea has a very strong stance in going against naked short selling. And it's recently why we've seen how GME shares are forced to be liquidated in South Korea because of the naked shorting that's associated with it. And so you can understand how we're seeing and why we want to see these things being implemented in US as well, but also talking about how these companies aren't able to survive other places. As always, none of this is ever financial advice, so do take a while to take on. So make sure you do your own due diligence and research, and I'll catch you guys next time.